it's Joe Pardavila. This is the Forbes Books Podcast, and from what I've heard, Warren Buffett knows a thing or two about investing. He famously said, diversification is protection against ignorance. And real estate has been one of those buckets that folks like to include in their portfolio. But my guest this week is breaking the mold by building a commercial real estate securities marketplace. His name is Drew Sterrett, and he's the co-founder of Lex. So here's what Lex does. It gives people the opportunity to invest in real estate shares in institutional quality, income-producing properties like office buildings, warehouses, apartment complexes, and more. Drew, how are you today?
I'm doing well. Thank you so much for having me, Joe.
Oh, you're welcome. So this project you're working on with Lex, when I first read about it, I'm like, real estate securities investment. Wait a minute. Where have I heard this before? Wasn't there some sort of bubble in '08 where people lost their money with real estate? Is that a tricky thing to work through these days where you talk about real estate investments where people start, their ears perk up and like, oh, wait a minute. I remember when things went bad there. Is this sort of like a solution to that?
Definitely. And now it's called COVID underwriting.
Okay.
You already know sort of what the worst can be. And so you always underwrite to the worst case scenario. And it's actually one of the reasons why we deal in stabilized assets across the United States, just so you don't run into that exact same situation.
And let's go back to '08 and sort of how your model compares to the way people were investing back then. The word stable popped out when you said it. So why is this stable as opposed to the way people were investing in real estate back before the bubble burst?
Yeah, so back before the bubble burst, it was actually really driven by single family homes more than everything else. And on top of that, right, you have different types of assets. You have assets that are being developed where there's a value add play, which means that they're not fully stabilized or fully leased up. And so we deal in core and core plus, which really means that there is full occupancy or pretty darn close. You have long-term debt, and basically it is very hard. We're really mitigating risk to make it so it is very hard for a terrible situation to occur in the first place.
Interesting. So these homes that you're involved with or properties you're involved with, can you give me an idea of what some of these properties are like?
Sure. We have an IPO going right now for an asset here in New York City. It's up in Harlem. It's anchored by Wells Fargo. The two tenants above it are medical nursing offices. So you're really betting that medical nursing offices aren't going anywhere anytime soon, and that Wells Fargo is not going to default and declare bankruptcy.
Yeah, I guess if that happens, I guess we probably have bigger problems than the real estate investment, right?
Yeah, I think the world economy has much bigger problems than our entire banking infrastructure as well.
Yeah, no doubt. So I'm fascinated. Is this something you stumbled upon, or is this something that you saw an opening for? How did you get involved in this, Drew?
So I was working in real estate private equity structuring deals, but I didn't have $1 million+ to put into any of the deals that I was doing myself. Also, that's not great diversification, even if I did have $1 million in cash, because
right.
Then you're betting it all on one pony.
No, you're better off just putting it all in crypto, right, Drew?
Oh, man.
No, I kid. Continue.
Diversification is the only free lunch in life. I own crypto. I'm a fan of crypto, but I do believe in having full exposure to the entire market.
I
right?
feel you.
It's the only free lunch in life, diversification.
So was this something, you are the co-founder, and so what was this some sort of partnership that happened organically, someone you knew? How did that all work out?
So I wanted direct access to deals, saw the inefficiencies in the market, and it really led me to the question of how do we have the oldest and largest asset class in the world and one of the largest wealth creators and no public and liquid market? It didn't make any sense. It felt like something that should have existed decades ago, 50 or 60 years ago, at least, right? Since we've got so many obscure products in the market, and this one is pretty fundamental where it's equity in commercial real estate assets. So I wanted to be able to buy, sell, and trade in ownership in commercial real estate from my brokerage account and be able to participate at a low threshold, right? The same thing as purchasing a traditional stock, and be able to hold it in my brokerage account with all my other holdings. So it really led to, okay, why hasn't this been created? It should already exist. And how do we make it happen? So it was personal desire in a way to participate side by side with the institutional owners. So something that has always been really left out for the 99.9% of all Americans. And I wanted an easy way to access it as well and make it as easy as just buying Google or Apple.
Wow. And when you said that this wasn't around this kind of structure, I'm sure as an entrepreneur, you're probably like looking around and seeing the market. I'm like, Is there anything similar to what you're doing, or are you some sort of unicorn?
The latter may apply, but the closest
soon, hopefully.
Yeah, the latter may apply, but the closest comparable is actually in the United Kingdom. It's a company called IPSX. Big fan.
And their structure basically the same deal?
It's a somewhat different structure. They do single asset REITs, and it's for the entire asset itself. We do equity recapitalizations, which allows, and what that means is we allow real estate owners to take a portion of their building public. So they are still retaining ownership and control. And so only a portion of the actual equity in any individual commercial real estate building is actually a part of the public float. This isn't for acquisition or development. These are all historical cash flowing assets.
I'm going to try to simplify this for myself here. So you essentially take a property and you make it into a stock that people could purchase. Is that I know it's
that
super.
Is absolutely correct.
Okay, no, I apologize for oversimplifying.
No, that's not oversimplifying. That's stating what we do.
Was that hard to do? Like, you make it sound very easy, but I'm sure it's more complicated than that.
It took a long time to get all the regulatory approvals, since we also created our own ATS, which is an alternative trading system. Just think about it as like one level below a national stock exchange. So for example, the New York Stock Exchange or NASDAQ, but basically all the same functionality. So it took years to build. Yes.
Interesting. And where can people, like if I wanted to, that building you're telling me about that has like the nurses' offices and stuff, how would I be able to purchase stock in that building?
To participate in the IPO, you can either download the iOS app or go to lexmarkets.com and create a brokerage account with us. Otherwise, people do have the ability to buy shares on the secondary market via any platform. So if you bank at TD Ameritrade, you can buy through TD Ameritrade or Wells Fargo. Yep. It plugs directly into the financial infrastructure at large.
It almost seems like you created your own stock market, right?
That is basically what we did.
So what do people on the street or maybe in the valley, what do they think about what you're trying to pull off here? Because this seems like a huge disruptor.
Well, we just closed a $15 million Series A financing round, brought in a whole bunch of great institutional partners, including Peak Six, MEFG, largest bank in Japan and owns 20% of Morgan Stanley, Coastal Ventures. We've got a great group of investors.
And I was checking out your Instagram. The description says, real estate investing for all, trade shares of income-producing office buildings and more for as little as $250, returns not guaranteed. So let's do a little role play. If I were to invest $250, I would go to your website, do all the paperwork, sign up online, put in my $250. Talk me through then what happens.
So you have the initial IPO. So once the initial IPO closes, secondary trading opens up. For most investors, actually, most investors haven't participated in IPOs, which is actually really interesting. So after the fact, you have secondary trading where you can buy, sell at any point in time like you would Berkshire Hathaway, you name a stock. And the trades execute over the same financial infrastructure as our traditional equities have. So if you just hold the stock, you can expect quarterly distributions. The real estate owners do hold the right to retain earnings, but if they ever
it's like a dividend, Drew, basically?
It's actually structured as a distribution, so it's like a dividend.
Okay.
But you also get the tax benefits of direct real estate ownership, where depreciation, qualified income deduction, everything that makes real estate beautifully tax advantaged also passes through to the end investor.
And where does this money come from? Like you mentioned, the landlord gets to hold on or whatever, but how is this money being generated, I guess is probably the easy question there.
Literally from all U.S. investors, everyone from accredited and non-accredited to wealth managers, RIAs, IRA accounts, private wealth, family offices, the entire financial infrastructure of everyone who purchases securities in the first place.
Are people buying up shares of like this building you have over there on Lenox Avenue?
Oh, yes. Yeah, no, we have the good problem of having a two-sided market where we created value on both sides. Our biggest game is making sure that supply equals demand at all times. It's really it's a balancing act.
Are a lot of your customers or clients, whatever, I'm not sure how you refer to them, like if they were to buy a share, $250, is this very much a buy and hold type of environment where you want to hold on and see what kind of equity builds?
Personally, I take the approach of long-term holds, but everyone has their own thesis.
Sure.
And like in the first building we took public in the less than year to date, trailing 12 months, over 30% of the float has traded.
That's pretty good.
Yeah, no, so there is liquidity for those who want access to it. It's amazing. It's actually much more than we expected.
You know, you were researching when you developed Lex. Were you sort of doing like the palm to the forehead thing of like, why doesn't this exist already? What did you ever have that? Like sometimes entrepreneurs have like, oh, I have this idea for something, and then they'll look up and they're like, someone's already done it. But like when you were doing it and no one has done it, were you like shocked that no one had developed this so far?
Yes and no.
Okay. Okay.
So it is very complicated to create in the first place.
Oh, okay.
So you have to be ready to go slog it out. But I found it exciting, right? It was solving a massive equation with so many intricacies that had to go with each individual piece. It was solving sort of a 5-dimensional jigsaw puzzle. It was so much fun.
And when you were broaching people during the startup phase of it, I mean, are you still considered a startup? You're pretty much, you're the real deal now, right?
Yeah, I think we're going to hold on to the startup mentality as long as possible. So
Okay.
I will always claim to be a startup.
Okay. So when you were in the startup phase, did you come across people being like, Drew, what are you talking about? Like, was this difficult to sort of explain to folks? Because now that you've done it, it's easy to explain, but like, I can't even imagine what it was like trying to explain to people before it became an actual thing.
Oh, we got 99 no's before we got a yes.
Really?
Like, oh, 100%. You have to have thick skin because people are used to seeing things one way and one way only. So you're really having to re-educate them on the possibilities. And then also once you've proven that you've been able to successfully execute, it's sort of sky's the limit.
Well, you talk about developing that thick skin. For the entrepreneur listening who's gotten those 99 no's, what was that like? Sure, it's great to say you develop thick skin, but we're all human beings. We all have feelings. What were you going through mentally during those initial days of just getting no after no after no?
So you have your ups and your downs, right? You have wins and you have losses. But at the same time, I took the approach of try and have it be as educational as possible and take the feedback, learn from it, see which parts are actually truly valid, which aren't valid, and which can be proven to be invalid. And so I really took it as going through school, right? You're learning on the go, seeing what works, what doesn't work, how to make the product as best as possible for both sides of the market, right? So I took it, sort of tried to detach myself as this is a personal hit when they say no, where it's more, okay, you have to be able to answer this question, see this point, have ready arguments to tackle it next time. But it definitely actually helped the product itself as we were building it.
Yeah, we all improve with feedback, whether it's asked for or not. What feedback were you getting along the way before you started getting all the yeses that really helped? Was there one piece of feedback or even two that was like, oh, damn, I should have thought of that, or yes, that helps?
I think I've received so much feedback along the way that I've like mentally blocked it off in my head. Just because you try and bury the pain that you went through to get to a certain point.
Yeah.
But I do think that the approach that we took and we continue to take today, which is being able to work with all real estate owners. So one thing that we've seen a lot of and had been done in the past is people were trying to do crowdfunding, but they were owners and operators of the assets. So they had to own everything that they were opening up to the public. It was really important for us to be able to provide value to the big institutional dogs, sort of your largest real estate owners in the world, all the way down the stack of real estate owners. So being able to be agnostic and work with anyone was one of the key points that has made us successful to date and do a lot more than basically anyone else ever had. Just because we took that sort of agnostic approach, open infrastructure, allowing everyone to participate, whether it's coming directly to our platform or if it's off platform.
When you started getting those yeses, was it more of a chain reaction that like, oh, this person said yes, so I've got to say yes? Is that sort of like how the ball got rolling?
That's always how the ball gets rolling, right? Yeah. Is like you have a little bit of FOMO in there and you want to try and see what the future looks like. So that's really what gets people excited.
And I've noticed that, Lex, you've got 3 properties that you're dealing with. So it seems like, I guess the term baby steps, you're baby stepping this, right? You're not jumping in and throwing in like 10 buildings up there. Seems intentional.
Yeah, very intentional. And actually, we've got a number of assets lined up after those 3. So the first one is trading right now. The second one we expect to close, I would say, in less than the next 14 days. And then the third one has already gone through the SEC, and we're about to open it up for IPO.
Oh, you took the words right out of my mouth, Drew, because I was just going to say, we joked about crypto, and obviously crypto is unregulated. What's the regulation in the government space when it comes to what you're doing? Who's watching you guys?
We've got the SEC and FINRA.
Okay.
The Securities and Exchange Commission, FINRA, which oversees all broker-dealers and alternative trading systems.
And so talk to me about those approvals, regulations. Was it something that they had to learn as well? Because this was new to
Absolutely.
them too. Yeah.
Correct. So this was a learning process. Our first offering took months to get through. Our last two have taken less than 14 business days, so less than 2 weeks.
Wow. And what do you think they had to learn on their end? Because in a way, they had to create rules for you, right? Because it was something like, this doesn't exist. Oh, shoot, we got to make stuff up. How hard do you think it was for them on their end? Like you said, it took months for that first approval.
Yeah, it really was learning and education experience on both sides.
Yeah.
But we took the approach of work hand in hand with the regulators. Don't just try and pull something off and then go back and ask for forgiveness, since as we like to say it here, there's only one SEC and one FINRA, so you never want to get them upset.
Right.
So we're a big believer in open and honest transparency with them. And it's like, if we have a question, we just go directly to them and we work with them to work it out.
And what's that like? Because we hear, as lay people, hear about these organizations all the time, but do you just pick up the phone and call, shoot an email? Like, how does that work?
It truly is as easy as picking up the phone and calling and sending an email.
Really?
Yep. They really, really do appreciate it when you just come to them and ask questions and have a working relationship, almost more than anything else. They know that your people are trying to take the right actions and they want to actually create value. And the reason why we have rules in the first place is just to protect investors, right? That's really the most important part of what their jobs are doing. And so if they see groups that are trying to abide by the letter of the law and do what's right by investors, they are more than willing to help day in and day out.
On a personal note, you're pretty much a lifer in the real estate world. I think you got your first start in a real estate private equity firm. What drew you to that sector of business?
Honestly, the opportunity to continue to learn and grow, which I do day in and day out, even here at Lex. There is never a day where I don't learn something new. So it was more really exciting to, I studied economics, I loved building, and I had the opportunity to go build and use my skill set and my knowledge base to work at a real estate private equity shop and then fundamentally build Lex from the ground up.
And as a person, you've obviously had to develop the thick skin, the aforementioned thick skin. What else have you learned about being this co-founder and CEO of a company that's going to be dealing with millions and millions of dollars?
It's a wild ride, and you never know what tomorrow brings. It's sort of amazing when you're starting a company. There's so many people who are supportive, and you create sort of a little network, and then that network continues to grow and grow and grow. And the saying, it's 6 degrees of separation, where if you have 6 people, you can almost reach anyone. It's sort of gotten to the point where it's a half of a degree of separation, where you can almost touch anyone in the world with literally less than a phone call.
Huh. And you seem like a humble fellow, but have any of those 99 rejections circled back and you're like, told you so? Have you had any of those kind of conversations?
We have, and a number of those people are now investors. And I have never said "told you so."
Oh, you're such a professional, Drew. Did they happen to say why they circled back at that point, or was there just like, hey, I think we're ready for this?
I didn't feel the need to ask, more because I think our actions speak louder than our words. Mm-hmm. No, I'm just blessed to have gotten as far as we have, and for our continual growth, and to have had this opportunity in the first place. So I in no way, shape, or form take a no initially as a negative. We don't like you. We never want to do business with you, since life is too short for that.
Yeah.
And funny enough, in a number of different ways, you probably will be working with them later on in life. So you never let that stick to you, ever.
Yeah. Where did that soft skill come from, Drew? That ability to not take things personal, because the old adage, it's business, it's not personal, it's business, is always people like bullshit. It's always personal. But how were you able to separate those two? Because I think for most people in business, it is personal, because at the end of the day, it's human beings. Even though there's money and stocks being involved, it's still human to human. but you somehow were able to separate the two. Is that just something that grew on you, or is that something you thought, maybe came out through your upbringing with your parents or something?
I definitely have to give credit to the family, but I promise you it wasn't always easy since the no's still hurt,
Yeah.
especially in the early days. But it's just, once you're in it, you really see how the sort of structure, how the game is played, everything else. And so sort of by being more and more educated, you sort of realize not to take it personally because it really isn't personal. They're doing their underwriting and due diligence. They have a thesis and a belief set. And if you're able to prove them wrong, you'll turn them around. But other than that, it really is not personal. It's not like, oh, we don't like you or we don't like your idea necessarily when they're saying no.
I'm curious. We are a copycat world, whether it's sports, business, whatever. We all love to copy what's the best thing. I mean, even Steve Jobs and Apple basically never invented anything. They took an idea and just made it better. Are you seeing Lex copycats starting to pop up?
Some, not necessarily the exact same way.
Okay.
And to those who do pop up, I say I wish them the best of luck since I know what it takes to actually accomplish it. But at the same time, it's actually an honor. It's more market validation that you created something valuable.
How does a company like this continue to scale and buy buildings? Is it all just having more investors getting involved in it and obviously people investing in Lex and signing up for accounts and stuff, but how else do you grow? I mean, where do you see this going?
Hopefully to the stages of where we can even surpass NASDAQ, the New York Stock Exchange, CME.
Oh, so the bar's low for you is what you're saying.
Super low.
Yeah, okay.
Super low. Just tens of billions of dollars in total market cap. So, no, we see the opportunity. We're dealing with commercial real estate right now, right? And it's anywhere, depending on whose number you choose, a $13 to $20 trillion domestic market. So we've got more than enough room to go run in the United States for a very long time.
So you mentioned the pandemic earlier in our conversation, so I want to circle back to that as we close things out. One of the hardest hit industries of the pandemic was commercial real estate because of the fact that a lot of stores, restaurants had to close. The old song of retail is dead or dying has been sung for many, many years now.
Even before COVID.
Even well before COVID. What do you say to those people? All the naysayers about commercial real estate and everything that's involved. What do you say to those people about the future of commercial real estate?
So we deal in all asset classes. So that includes multifamily, mixed use. The fourth asset after the multifamily in Seattle is actually an industrial. So to them, I say very valid cases across the board. And we do that. We take that into account with our underwriting. But there are still always great deals to be had, especially since we're dealing with the 99% of the market that isn't for sale. Well, 1% of the commercial real estate market is up for sale. But you still have amazing trophy assets and amazing investment opportunities sort of everywhere. So you just have to make sure that you do your due diligence and your underwriting correctly to make sure that you're buying it at the appropriate price.
And diversification seems to be a key because of the three assets, one of them is a garage, right?
Yep.
How did that happen?
Well, we like to joke that the Steve Jobs and everyone started in a garage.
So you actually literally got a garage.
Yeah, a 600 parking space garage in Portland, Maine.
This is going to be a random question, but how the hell do you find a 600 parking garage in Maine?
They found us. Actually, most of our real estate owners find us. We have more real estate than we know what to do with, which is a good problem to have.
Wow. And so talk to me about this diversification. Garages, apartments, houses, like what is it? The sky's the limit? Basically any kind of real estate you look into?
Yep, exactly.
Is there a holy grail out there that's going to be the hardest one to chase after? Or do you think everything's within arm's reach for you guys?
Everything's really within arm's reach. I mean, as you're moving up the sizing of the assets, right? Industrial is very hot right now. So is life sciences. And so you run into cap rate compression when you're sort of dealing with the Brookfields, the Carlyles, the Blackstones, the KKRs of the world, sort of your large major institutions. But really everything is within arm's reach because we're even solving their problems as well.
And so you are currently doing this interview from your office at the Empire State Building. So my question to you would be, if one day through Lex, could I buy a piece of a high rise in New York City?
Absolutely. We have those underway. They'll be coming out soon.
Really? I have a feeling those will probably be a little more than $250 a share, right?
No. The stock price will stay the same.
Really? Why is that?
Because it's really important to have all market participants. And we really wanted to also solve the access and liquidity problem for even non-accredited investors. So we want everyone to be able to participate side by side, both the large institutions to the retail investors, and then alongside, right, they're sitting next to, which is pro rata pari passu, which just means they're not senior to or they're not subordinate to the owner who owns the asset outright in the first place. So they're sitting side by side with the major institutional owner in each one of these securities.
And give me a timeline. I'm just curious, Drew, from conception to when your first asset was available. How long roughly was that?
That took about 3 years.
That was your life for 3 years.
Oh, yes. I think I lived many lifetimes during that 3-year period.
And during that time, where your friends and family be like, Drew, what are you doing to yourself? This is taking too long. Because, I mean, I know we're sort of obsessed in this whole rich overnight, get rich quick and stuff like that. But did your friends and family be like, man, after year 2, be like, Drew, maybe just put a pin in this one?
No, year 2, they actually started to see the writing on the wall. And that's when they got excited. Year 1 definitely was like, Drew, what are you doing?
And what did you say to them during that first year when you were basically drowning in no's? Were you just like, yeah, this is it. This is what I'm doing?
Yeah. And we got this. The team's got this. I've got this. We've got this. And I'm definitely glad that all the no's did not stop us from creating Lex in the first place.
Huh. What do you think in closing, Drew, is like the future of Lex in terms of like the way it's going to change the way people get involved in stocks? Do you think people will have a piece of Lex as part of their portfolio? Like in my IRA, I got some stocks, I got some bonds, I got some mutual funds. Do you see that as part of everyone's future funds? Is that what you kind of see?
Absolutely. No, it's modern portfolio theory. You should have an allocation towards alternatives that are uncorrelated with the market. In this case, it's also providing passive income, so it's a good long-term play since there's a compounding returns are a very real thing. And real estate is known as one of the largest wealth creators in the world. So definitely it should be and will be a part of everyone's portfolio.
Awesome. His name is Drew Sterrett. He's the co-founder and CEO at Lex. I remember when I first read about him, like, I don't understand this. I need to speak to Drew because this seems like mind-boggling that no one has ever done this before.
Yes. And I've still asked myself that question where I'm just like, how did we get so lucky to be the first ones to stumble upon this?
Well, Drew, thanks again for the time. I appreciate it.
Thank you so much, Joe, for having me. Really appreciate it.
Thanks, Drew. And that's it for this edition of the Forbes Books Podcast. If you enjoy the show, make sure you take a quick second to subscribe so you automatically get new shows when they drop. Also, if you have a minute, I'd love if you left us a review so more amazing entrepreneurs like yourself can discover the show. And please don't forget the golden rule and treat others as you want to be treated. Thanks for listening. Until next time, adios.